It's student loan debt and purchasing and owning a home. No,
right. This is we did one on buying a car, and now we're talking about those student loans, which many people come into with, to buy a home, and now you have these student loan debts, and this is calculated as a debt. So we're going to kind of just jump right into how they do this math. Again, we are not lenders. We can only tell you from my own personal experience from buying a home with student loans, and then also what the lenders tell us.
And you as a realtor, not somebody
and
with
as a real estate agent,
exactly.
100%.
Therefore, we came here to basically share with you this knowledge and break down some numbers. And of course, as my wife said, each person's portfolio is different. Therefore, what we are saying is not a general rule for everybody, but it's some quick and dirty way to understand.
Okay, so really just understanding really quickly, if you look at when they pull up your credit report, they're going to see a payment number in that credit report. Now, if there's a number that's not zero, they're going to use that payment listed on your credit report as to calculate your debt. If the number is zero because you're in forbearance, you're in the IBR program, you're in the SAVE program, now that's new, they're going to calculate as 0.5% of the outstanding balance of your loan. Now, that we will get into the math with that in a minute, but first, I think we should do our introduction.
Exactly. Let's hit it!
Welcome to our channel and podcast.
And if this is your first time on our podcast and YouTube channel, make sure you subscribe and get notified.
Honestly, you can call and text all the time at 252-327-3357. We love talking to you. Do not be shy. Also, grab our buyer's guide and seller's guide in the description below.
Exactly. My wife gave you a small introduction about what's going on and that 0.5% of the outstanding balance. What else that we can say?
Well, and we're going to talk about math, right? So if your loan is $200,000, and we're talking about
a student loan.
Student loan, right?
Okay.
And your monthly payment is showing a $300 student loan calculation on that credit report, then they're going to use $300. Now, just for another example, say you owe $50,000, but it's showing zero on that credit report. Now we have to go 0.5% of $50,000, which is what?
Which is $2,500, no?
Right, which is $250.
$250, I'm sorry.
$250 a month. So they have to calculate it either way.
Therefore, they cannot trust if they're paying right now zero, no? Because
it's not calculated
the loan
as zero.
officer still is going to count that 0.5% to understand how much is going to be calculation for debt.
Right, and other things to understand. If your student loan is in default or in collections, you are completely ineligible for an FHA loan, just so you understand.
Based off the FHA regulation and laws.
So you must contact your student loan providers to get out of default status if you actually want to buy a home. So you have to kind of make sure that you are not in default if you're trying to think. Now, Fannie Mac and Freddie Mac, I'm not going to get into details on who they are. But
for the conventional loan.
But these are basically... they set the guidelines for what banks follow. We'll say it in a nutshell. So Fannie Mae, what do they do?
Basically, the Fannie Mae accept the monthly student loan payment listed on the credit report, or in the loan statement.
But however, with Fannie Mae, it's going to count as 1% of the outstanding balance of calculations for calculations. So that $50,000 with 0%
means $500
is 100. Which is 1%, which is now going to bring you into the 500 instead of 250. Whereas Freddie Mac, which is the more lenient one, does allow that 0.5% when it's reporting zero, or the number used on the payment on the calculation.
Therefore, of course, they're a little bit lenient, but the percentage is going to be 1%. That is the difference with the FHA regulation.
Now let's talk about calculations, because I promised to talk about calculations with this one. Like we did with the other one.
Exactly.
Now, if you want to buy a $300,000 home, at 3.5%, because you're looking at FHA, how much do you need to buy this home?
Basically, you need down payment of 3.5%, which is $10,500 for $300,000.
Right. Now, your monthly payment at a 7.5% interest with 30 years is going to be...
Which is the average of the October 2023 that we are recording this video.
And this is going to include taxes, insurance, for the number, right? So the
principal, interest, homeowners insurance, and property tax.
Right. So that number comes to, on average, in my area, in Greenville, North Carolina, Winterville, North Carolina, $2,570.
Exactly.
Now, how much you need to make if you have no student loans?
Basically, you need to make $72,000.
Right, $72,000 in order to buy this home now.
For the $300,000.
Now, if you have a student loan of $250 a month,
and of course, before my wife jumped in it, most of the loan officer and bank, they wanted to see your debt to income ratio is around 43%. But of course, some of them based off the how much basically you have in your saving account and your credit score, they might go to 49 to 50%.
Maybe, but I wanted to go with a little bit more conservative, 43. It's higher than that 36% that financial advisors will advise you.
Exactly.
But you also have to imagine that you're going to make more in the future as well. So if you're just starting out, I know 43 is a high number, but it is something to really consider because it's what you can qualify for.
And also one thing, again, I'm jumping to my wife, also debt to income ratio, when you talk to the loan officer, they are front end and back end.
Okay, don't get into detail
which
like that.
We don't want it to get in, and I just wanted to give you that we have two kind of debt.
Okay, so enough, that's why we just kind of give you general numbers. Now, if you're just counting that the only debt you have is a $250 a month student loan payment. Now, how much do I have to make in order to make that $2,570?
Basically, if you wanted to make that one, you need $80,000 income
a
year.
Okay, so now these
with that DTI of 43%.
Now, if you want to add the car of $1,000 plus the student loan payment of $250, just as examples
which
for
is
you,
going to come to the $1,250, then
and you can watch our car video on buying
exactly
cars.
And now if you have a car payment of $1,000 and $250 a student loan monthly, then it's going to come to $1,250. And now instead of making $80,000, you need to annually make $107,000 to be able to buy a house with the $300,000.
Now that sounds like a lot to many people just starting out, and that's what the next numbers I wanted to calculate with you are. So let's say you're just starting out and you make $60,000 a year, and that's $60,000. That's still higher than a $50,000 average, and I'm going to get to why I'm doing 60 in a minute. If you have that $1,250 in debt, the most amount of my house you can buy is $103,000. That's going to be a hard one to find already. That's going to be not impossible, but very, very hard. And it's going to be a lot of sweat labor in order for that house to be affordable. Now,
and if you don't have this step that we mentioned, 1,000 plus 250, instead of affording 103,000, you can afford 243,000 with the 60,000 basically annual income.
Right. Now, if you don't have that $1,000 car payment, but you have a $250 student loan payment, you are already dropping that to $214,000. So I just want to point out what that comes with $60,000, because obviously you're not getting the $300,000 home with these numbers, but you can see what it comes to. And now, why didn't I do 50? Why didn't I do 50?
Oh, can you tell us?
Because at $50,000, if you have $1,250 in debt, your house is going to be the most house you can afford is $60,000, and I cannot find that house for you. Like, I just cannot. So $50,000, I can't even get you a shack. Like, it's going to be bad.
Exactly. Therefore, that's why sometimes when we talk to any of the client or home buyers, we definitely want to make sure that we have understanding of how debt to income ratio is really affect your affordability, home affordability. That's why the loan officer is going to calculate, and of course they're going to go more detail with you, when they pull your application.
Now, he was kind of already getting into a little bit earlier. So I want to point out with student loans, you have a couple ways to get that zero or that payment as low as possible, and that's going to be your income-based payment plan, the IBR, which is what I was.
Now we are talking about
save.
strategies.
Right, strategies in order to reduce that student loan, so we're not talking a real number there. So you want to make sure that your calculation for buying a home, that monthly payment is as low as possible, but not zero if you can help it. Because I told you zero is now going to calculate at that 0.5.
Exactly.
So you want a number that is affordable on there that you can say, hey, this is how much it's going to be. Another thing is try to get into any sort of program that's going to erase these student loans as fast as possible. I mean, I worked 10 years as a teacher. So
exactly. And when you were talking to the lender, definitely the lender wanted to get from you that letter. And also that is waived, you're a student loan or is forgiven. And also you need a while to basically show off on your credit report.
Another thing to address is if you do have collections and debts on student loans, you need to address these before you apply for a loan.
Yes.
Also, just so you know, I did not know this, you can actually make, if you have been in back collections for 1 month, and now you've been reported for collections, you're actually eligible to make deals on your home as well. So I would say when you're dealing with credit agencies and credit reporting, to try to make a deal as well to get rid of these loans altogether. Now, other things, this is rules as it is right now. Let's talk about professional consultations, because that is really what I think the key was for me understanding how to take care of my loans. What I did was going to the lender.
Yes, therefore, definitely the first thing that you can do with this professional consulting is the lender conversation, because that's going to uncover all of the details about between you and lender about your student loan, that how is going to impact your mortgage and home affordability.
And this putting on my adult clothes conversation that I have when I had $300,000 in student loan debts when I first met my husband, and I told him about my debts. And anytime he would ask me about it, I would just be in tears. I didn't want to talk about it. I mean, I paid my bills, but it was just, I felt like this weight of my world was always on me, that I had like somehow, I had horrible thoughts, horrible things. But the conversation that really made me adulting was a mortgage consultation where they explained to me what I needed to do in order to buy a home. So now I had a means and a way to tackle. So I wasn't just, what to do, what was me, tears. I was like, okay, what can I do?
Exactly. And definitely the second thing that's important is resource, no? What kind of resource they can utilize?
I mean, you can use our home buyer's guide, talk to one of our lenders on there, especially when you're talking about buying a home when you have student loans, because the lender is the best person who can really look at your thing and say, this is what I need you to do in order to buy a home. Yes, there are credit people out there, lots of credit people. I wouldn't trust a lot of them. I would make sure you're dealing with somebody dedicated, local, and 100% that's there for you to make sure that you're buying a home.
And I understand many people, they wanted to, when you talk to them, they say, I'm working on my credit score, but that is not exactly the same.
Unless you've had that conversation with an adult.
Because if you get that clear idea what you need to do and what you need to take, therefore it's going to be less stressful, less lengthy, and also you're going to be having a peace of mind.
And I can also tell you from that first conversation with the lender for my $300,000 worth of student loans, again, I was a teacher at the time, so I mean, I hadn't gotten to the point with it or anything, but 3 years later, I could buy a home because I could follow the plan set out for me, which was great, which means I adulted, I figured out what to do, and we handled it. So I think that's important to say. There is light at the end of the tunnel. You don't have to be depressed about your student loans. It can be fixed. The best thing I did was being a teacher for 10 years. It really did help. But other than that, I could still afford it that way.
Exactly. Thank you for being a good audience. Don't forget to write us a comment, share with us your story. If you have a student loan or any kind of debt and you wanted to be a homeowner, and we love to help you, and call us at 252-327-3357. Also, please subscribe in our channel to basically support our channel.
100. And the next payment video we're going to do is credit cards. So I can't wait to talk to you about that one.